So stocks are rallying to record highs while the media points to U.S.-China trade optimism. Keep in mind, folks, we currently do have tariffs on $360 billion in Chinese goods. The reality is that this rally is based on a strong economy, strong earnings, and by the way, it's also my birthday today. So the question is there more room to the upside? President Trump, in the meantime, is weighing on this surging market, which doesn't appear to be impacted by these impeachment hearings as we approach Dow 28,000. Another record stock market 21 times this year, despite an ongoing and totally unfounded witch hunt and a Democrat Party that would love to see a nice, big, juicy recession. In actuality, the potential for the United States is unlimited. We will power through the do-nothing Dems. I do agree. Our potential is unlimited. I want to bring in to discuss that SureVest President Rob Luna, Kingsview Wealth Management CIO Scott Martin. Rob, let me start with you. You know, I was just saying the other day, last week, when we got the consumer sentiment number out, we're not even past where we were in January of 2000. If we ever could get through there as a nation and really got more optimistic, I do believe the sky's the limit. For now, though, I think a lot of people are just shocked the Dow's knocking on the door at 28,000.
Yeah, I mean, it's unbelievable, all-time highs, and now I know why. Happy birthday, Charles. It's here to celebrate your birthday. But, yeah, I completely agree, and I heard you just talking about the consumer, and the great thing is how this is an economy, while there is confidence, the consumers out there spending, they're not borrowing, and getting out, like you said, beyond their skis. It's very, very cognizantly done. They're not spending on things that they can't afford with additional debt. This is a very, very strong economy, and I think the market is just reflective of that. Not only is the consumer saying, when you look at the valuations, the S&P isn't trading at 30, 40 times earnings either. So this is very, very smart what's going on right here by the consumer. And I think the market's taking it exactly how it should be on a day like today.
You know, Scott, one of the headlines this week was that these major money managers are now pouring money into the market. Their cash levels dropped precipitously. They were at cash levels not seen in years, perhaps decades, and now they're getting into it. And we know, we've all been in it, all three of us know, new highs beget new highs, in part because those big-time folks who are supposed to be making money in the market have to finally get in.
Yeah, the FOMO is setting in. I mean, Rob's right. And I think that's a good thing for a while. Eventually that does run out. But to even Rob's point, I hate to be in so in agreement with him, but it's true. The market's not terribly expensive. And with rates so low, with opportunities that we're seeing with respect to how companies are reinvesting in their businesses, they're getting capital very cheaply. There's a lot to be excited about. And don't forget, I mean, historically speaking, this is a very good period of time in the year for the markets. And I'm going to predict right now, which isn't going to sound terribly outlandish, but nobody has said this yet. We're going to have probably record sales as far as, say, Black Friday that's coming up later this month, and a record holiday shopping season, just to boot on that. So my guess is stocks are going to continue to feed that fire as we go into the end of the year.
Are either of you guys, and I'll start with you, Rob, concerned about leadership, for the Dow? Now, keep in mind, the Dow is only 30 stocks to begin with, but you've got a handful of names that have really been the bulk of this rally, Apple being at the top of the list, Home Depot, United Technologies, J.P. Morgan, and Boeing, which you could imagine if they did not have the issues with the 737 MAX. Are you concerned that leadership is narrow, at least when it comes to the Dow?
Yeah, I mean, the Dow's only 30 stocks, as you know, Charles. I think actually the market's been relatively healthy, and we've seen rotation throughout this year into sectors that have underperformed out of the ones that outperformed. So I'm really not concerned about that at all. Even on a day-to-day, you look at some of the names that have really done poorly, like a Lyft. That stock's up 4%. So I think people are just being a little bit more selective, but I would characterize this as a pretty smart market. I think people are still looking for value. The indexes aren't extremely cheap, but there's definitely names that people can buy out there, and I think that's what you're seeing on down days. People rotate into those names. So I'm not concerned about us getting too frothy in a select group of names.
Of course, Scott, we know how it feels when we get an autopilot. In fact, 2017, we were on autopilot almost every single day. We anticipated new highs. It wasn't unusual to wake up and see that the market futures were higher. And then in 2018, just as earnings were hitting an all-time record, all the major indices were down, which is sort of confounding to a lot of folks. So how do we handicap that going into 2020?
Well, it's something to keep in mind for certain. Now, I think one thing that's going to help earnings, let's say, fail to fall into such a deadly trap, as you mentioned it did just a couple years ago, is that we're going to start to see some certainty come out of the China trade deal, I believe. And that's something that's obviously hurt earnings a bit here and there over the last couple of quarters. It certainly hurt guidance. And so my thought is maybe earnings don't get a quick boost right away from, say, a phase 1 deal with China here in the next couple months, but the guidance will definitely get better. And that's something, too, as you guys both know, despite having great style, by the way, today. I mean, Rob Luna, I love your tie. I'm just trying to keep up with you guys. Going to be spending a lot on my style this holiday season, by the way. The one thing stocks do trade on, guys, is guidance and expectations. As things clear up with China, that's going to support the S&P 5 here.
Rob, I kind of, oddly enough, though, think we might have a sell on the rumor kind of thing, at least when it comes to phase 1, for a moment, not long term. But I think Scott's right. Maybe we'll get a little bit of a, okay, it's done. Now what? I mean, so we got a minute left, or less than a minute. How do you handicap it?
Yeah, no, I agree, Charles. I mean, I'm getting a little bit nervous about where we're at. Not necessarily long term. I think going to the end of the year, we could have another 10 to 12%. Going to the end of 2020. That being said, we've come really far, really fast. You're talking about these money managers that are trying to play catch up. In the short run, that's never a good sign. So if you're not in now, I don't know that I'd be backing up the truck. Wait for some pullbacks. Even a name like Disney, you're now starting to see that probably got a little bit ahead of itself. It's pulling back. Be a little bit more selective if you're looking into the market.
All right, good.
Yeah, exactly.
Thank you both very much. Rob, Scott, two of the best.